Hi everyone, this is Thang Learning Channel episode number 4. So today I'm going to be talking about something called the RPGT. Now, RPGT actually stands for the Real Property Gain Tax. It is quite a common tax in real estate industry, and it's a tax that is charged against profit that you get from disposal or selling of a property. So for example, if a few years ago, let's say 3 years ago, I bought a property and that's my purchase price of 300,000, and then 3 years later today I'm selling it off at 600,000, for example. So my profit here will be 300,000. So this 300,000 will be subjected to a tax called the RPGT. Okay. So for this RPGT, there's actually a proper formula for it. The simple formula will be RPGT rate times with net chargeable gains. So let's talk about RPGT rate first. RPGT rate is highly dependent on two main factors, right? The first factor is actually the type of entity. So first thing first, you need to ask yourself, what type of entity are you representing? Are you representing as an individual or a company? If you're buying a property using the individual name, your own name, and upon disposal, you will have a different RPGT rate as compared to the company. So in terms of individual, there's also two categories, whether you're a citizen or non-citizen. So you have to be very aware of the type of entity that you are in and know the differences, because each category will have a different RPGT rate. The next factor that will affect your RPGT rate is the holding period. Now, holding period in other words means that the amount of years that I have hold the property before I decide to sell it off or dispose it off. So using the example just now, for example, maybe 3 years ago I bought a property at 300,000, and 3 years later I sell it at 600,000. Holding period for this transaction is 3 years. Now within 3 years, according to the rate, it's actually 30%. So if you're selling the property at the 4th year or the 5th year or the 6th year onwards, each category will have a different rate. So what I'll do here is I'll be posting a RPGT table on my page, Thang channel. You can always refer it back because it categorizes very well in terms of the type of entity, whether you're individual or whether you're a company, and then individual divided into citizen or non-citizen, and then for each holding year, what is the specific rate. Alright, so that's something that you have to know upon disposal of a property, because your profit based on selling price minus the purchase price might not be the most accurate, because you have to factor in the RPGT that you are giving. The next part of the formula talks about net chargeable gain. What does this mean? For example, just now when I say that I bought a property 300 over K and I sell it off at 600K, so my profit is 300K, right? Now that is a profit, but it is not the net profit. So what we are calculating in here is that we have to take note on two other things. One is the permitted expenses, which is the allowable cost deduction. So things like your legal fees, your stamp duty fees, lawyer fees, and so on. And then there's also another thing called the exemption waiver. So when you dispose of a property, you're actually allowed to waive 10% of that tax. So that is just initiative to help us to pay lesser tax. That's basically it. The profit minus of 10% of exemption waiver, and then minus off with the allowable costs. Let me just demonstrate a case study here using the example just now, but I'm going to manipulate a little bit in terms of the years, alright, the holding years. So let's say I bought a property 7 years ago at a purchase price of 300K, and today, 7 years later, I sell it off at 600K. So my profit here will be selling price minus of purchase price. 600K minus 300K, I get 300K, right? Now on top of that, I have to factor into the account that I have some exemption waiver and also allowable costs. So out of this 300k, I get to have 10% discount as an exemption waiver, and that will cost me that will be 30,000, right? And on top of that, in terms of my allowable costs, I spend 20,000 on lawyer fees and also some renovation touch-up costs. So that will be 20k. So what's my net chargeable gain here? My net chargeable gain will be my profit, 300k, minus my exemption waiver, 30,000, minus my allowable costs, which is lawyer fees or renovation costs that cost me 20k. 300k minus 30k minus 20k, I'll get 250k. Alright? So then the next thing that I need to look into is the number of holding years, right? So 7 years. According to the RPGT rate table, and I'm an individual Malaysian, it's 5%. So 5% times with my net chargeable profit, which is 250k, and that will give me 12,500. So that is the amount of RPGT that I would need to fork out. Alright, so that's basically it on RPGT. So the next time you want to dispose of a property, make sure that you factor into the account of RPGT and also understand what are the main factors that affect RPGT rate. For example, the entity, the holding number of years, and then also your exemption waiver and allowable costs. Okay, so that's all for today. That's a very simple sharing again on RPGT. I hope that you learned something from this episode. So remember to like and share this video if you think it's helpful, and stay tuned to my every Friday night channel. Okay, goodbye.